Welcome to Investing Confidential. If you've been listening to my videos from day one, you know that I've been questioning all this economic data, totally questioning it. Didn't come out and say it was fake, but just questioning the way it was done. Finally, others now, as you can see here, are starting to question the data. People are actually looking at the data and not worrying about the headlines, but going inside, seeing what the data is telling you, and more importantly, seeing how the data is gathered. So I just want to, not that I'm going to, tooting my own horn, but here is a writer from Bloomberg who actually did that. And let me just tell you a couple things. Okay, look here. This is the employment data, right? Employment cost index. This is something the Fed watches. The response rate is now below 50% from nearly 75% 10 years ago. Here's what I'm talking about. You got all these employment statistics, payrolls, all of this. Less than 40% of people are responding to this data. This what they call a big economic data on job is called the JOLT survey. Okay, this is something that the Fed watches, CNBC. There are algorithms that trade on it. The response rate is now under 30%. 30%. A lot of these so-called, government agencies that get all this data, they still rely on old-fashioned telephone lines. Okay, telephone lines. Okay, statistics tell you that less than 25% of the populace in the US even use a telephone line consistently. Younger people, millennials, Gen Zs, they don't even talk on their cell phones. It's all instant message. So all of this data that we're seeing, that you cause the market to go up, to make that bear market rally, and yes, it was a bear market rally through January, the beginning of February. It was all based on data that's unreliable. Okay, people are trading on GDP. Look, today you had the Atlanta Fed coming out with this fake GDP now number. Okay, why are they doing GDP now? Because regular GDP is horrible. Okay, this GDP now says they revised their rate upward to 2.5%. This is insanity, folks. Everyone can tell you the housing market is just beginning to collapse. That is the biggest leading indicator of the economy. We got a lot of fake job numbers. So this whole idea of 3.5%, that's fake. It's already been proven. We're seeing now people are finally looking at the numbers and saying these numbers are not real. The way they're gathered is not consistent anymore. It's too old-fashioned, and the numbers are not real. But everyone's trading on it. Okay, today. Okay, here's why the market went down, and it will continue to go down. Today you had two Fed people talking out there. Fed, they call it Fed speak. Okay, Fed is Bullard, who's a non-voter but an influential guy. Okay, talking about inflation just remains too high. It's come down recently, but it remains too high. If you've been watching my videos, you know I've been saying the same thing. I called the peak way before the Fed, but said it was going to be sticky. Now, here's Bullard, who just said the next Fed meeting, including supporting a 50 basis point hike. If you heard me the last video, I told you that already. And you should have been selling the market based on that. Okay? Now, the next guy who spoke is a guy named Mester. He's a voter for the Fed. Okay? Ready. And I quote this: risk to inflation remain. They saw a compelling argument for 50 basis point hike last meeting. How far the Fed goes with future hikes depends on inflation, and inflation remains too high. Sees a bigger risk is undershooting the effort to control inflation. What he's basically saying there, folks, is they do not want to make a policy error. Okay, so two Fed people out today, both hawkish, both saying inflation remains high, both pushing for 50 basis points when the Fed is stating 25. This push for 50 basis points is going to grow. Okay, it's going to grow. And the stock market is not going up on back of the 50 basis points call for a raise this next meeting. So if you're buying stocks, listen, you better be buying the right stocks, because the market itself is very vulnerable here, because finally people are realizing, And again, if you were watching my videos, you've been realizing this. The economic numbers that people have been buying the market on are not accurate. They're not accurate. Okay, and I'm not the only one saying it now. I was a lone, tree in the wind. Now other people are now coming out and seeing that all these numbers, employment numbers, CPI, okay, retail sales, which is a couple days ago, which was not adjusted for inflation, okay, and the market went up on it. These numbers are telling the wrong story. The real, if you dive deep into the numbers, like I did on Monday with the CPI, you're going to see that the inflation is very sticky. It's actually starting to move up again because the Fed made a policy error, or the market is just insane. And I bet on the market being insane and driving the animal spirits, driving everything up. Inflation is holding, trending slightly higher. The Fed has to raise more. Terminal rate is going to approach 6%. The 2-year bond is going to go through 5%. And if I can get 5% compounded, guaranteed 2 years, I'm taking that. That means money market rates are going to be over 2%. That means 6-month rates are going to be 4%. Why wouldn't I put my money in 6% over 6 months, guaranteed, no risk whatsoever, than invest in the stock market in a market where you have declining earnings, where you have a weak housing market just beginning? Historically tell you, 30 years, 40 years historically will tell you this is a bad bet. So if you're an investor, be careful out there.